Well, Paytm came out with its Q2 FY22 numbers with revenue from operations jumping a strong 64% year on year. This is the second consecutive quarter in which the company has recorded 60% plus year on year jump in revenue from operations. Mind you, now revenue from operations have closed in on that 1100 crore mark. Of this, commerce and cloud grew a strong 47%, and within that, ad revenue grew quite rapidly for the company. But the real move in revenue was largely due to payments and financial services, and within it, the non-UPI GMV jump was of 52%. GMV saw 107% year-on-year growth and now has closed in on that 2 lakh crore mark. Contribution profit went up 6x almost and has now reached around 260 crores or so. And EBITDA came in at negative 430 crores, a margin of negative 40%. Mind you, Q2 FY21 saw the EBITDA margin at negative 64%, so a substantial improvement on that number. But the loss for the company has widened. It's widened from 436 crores in Q2 of FY21 to 473 crores in Q2 of FY22. And let's delve into the reasons for the same. Costs have risen. Marketing costs have remained at 9% of revenue despite the large jump in revenue. So that may still be a cause of concern for the company. And payment processing fees and employee expenses have increased by almost 35 to 40%. So these two metrics increasing saw costs going up, which meant that profits remained subdued or losses kept increasing. The monthly transacting users saw a jump of 35% from 4.7 crores to 6.3 crores. So that's a big plus. And also the company added 13 lakh new devices in quarter 2 of FY22. Again, a big plus. Now, one of the main possible future income streams is, of course, loans, which Paytm has been giving. Loans have seen a 5x jump in terms of value from 120 crores to 630 crores in Q2 of FY22. And the total loans disbursed now stands at around 1260 crores or so. There is also a 7x growth in the year-on-year number of loans. So strong growth on all of these metrics. When you look at the numbers overall, the numbers are quite good, but still profits are evading Paytm, and a lot of investors will be focusing on that when it comes to looking at the numbers. But the real plus, of course, is that contribution profit has gone up, and gone up substantially, 6x growth in contribution profit. So that is something that will obviously be a cheer. Costs will need to be controlled by Paytm. That's how Q2 has shaped up for Paytm.